Hey everybody, welcome. In this video, I'll be going over the datasets, the earnings, and the SPY technical analysis for the week of July 27th, 2026. As always, I am going to be streaming Monday, Tuesday, Thursday, and Friday. Now, I didn't get a chance to stream a lot last week. I was not feeling very good, so I do apologize for that. But with that said, let's go ahead and get right into the data. Alright, jumping into the data here, we do have a very busy week ahead of us. So with that said, on Monday we have the durable goods order at 8:30 a.m. Not too concerned about that unless we get a very hot or cool reading. Durable goods, overall goods, the orders have been down over the last couple years, so I'm not really expecting any major shift in that. We do have the quarterly um, Atlanta Fed GDP now for quarter two. Now that can move the market a little bit. Usually it won't, but I have seen it move the market a little bit, so I do need to bring that up. Now for Tuesday at 9 a.m., we have the housing PMI data. I'm not really too interested in that. Usually not going to move the market too much unless we get some very absurd, cool or hot reading. For what the forecast is showing, it's showing just slightly cooler, so not really expecting anything too much out of that. Now, the big data set for me on Tuesday is this CB consumer confidence. Now, this has started to pull back up, but overall, I still disagree with where it is right now. It was down in the low 80s or mid 80s at one point during this year and the later portion of last year, but now it's back up to that 92. So this is an opinion-based data set rather than some of these hard data sets where they're just based on, empirical data basically. Um, these are based on opinions. Now, I don't know who's giving these opinions because everybody I know, everybody that I've talked to across the country, they have not had a positive outlook on consumer spending and overall, we have not seen consumer spending increasing. So it's a little weird to see this being forecasted as wanting to move up. I do kind of expect this number to drop back down, whether the forecast agrees with that or not, but we'll see. It is a very important data set though, so we'll be watching for that at 10 a.m. Now on Wednesday, it is FOMC day, so it's always a very important session. Now, the chance of rate hike currently is about 34% last I checked, um, which is actually pretty high. Usually for these FOMCs when they're, basically right around the corner, usually we have the decision pretty priced in already. So if it's going to be a pause, usually it'd be close to 90 something percent compared to only being like 60, 70%, whatever it is right now. So it's a little concerning. That means that potentially we could be seeing a rate hike this week. I don't think it'll happen. I think that we will be getting a pause this week. Um, but the CME Fed futures have been kind of increasing over the last couple days. So that's something to be aware of. So how FOMC works, as always, we get the initial statement at 2 p.m. and then at 2:30 we get the press conference with the FOMC chair, which in this case it's Mr. Warsh. So that'll be interesting to hear from him. So this will be his second FOMC. The last FOMC we had a massive sell-off. Not saying that's what we're going to expect this time, but it's just something we have to consider. Now for Thursday, very important day, arguably the most important day this week, because we have all of our core PCE, um, that's the personal consumption expenditure index, all that data, the GDP quarter over quarter data, PCE price index data, initial jobless claims, continuing jobless claims, personal spending, basically a ton of super important data, all at 8:30 a.m. So we'll have all this before the market opens. Doesn't mean the initial reaction's a correct one, so just be aware of that. Sometimes we will get a very adverse reaction to this data, and then the market will kind of shift direction a few hours later. So just be aware of what's going on with these data sets, and we will talk about it on stream. Now for Friday, we do have some important data this day, and for me, it's mainly this employment cost index quarter over quarter. They are expecting the forecast to pull it downward slightly, which that's kind of a big deal. That means they're paying less for people being employed. That means there's less people employed. That's really how to read that data set. But at 10 a.m., we have the Michigan inflation and consumer data. So we have the 1 year and 5 year inflation expectations. I don't really care about that too much, but I do care about the consumer expectations and consumer sentiment. So the way to read these data sets is if they're above 50, usually that's not exactly hot, but somewhat hot data set. If they're below 50, that means they're contracting. So we'll see how these data sets come in. The forecast is basically showing them being the exact same as the previous readings. So it'll be interesting to see what's going on with those. Now for the earnings this week, we do have quite a bit of earnings. As you can see, there's tons of different names on here, but there's only a few that I'm really paying attention to. So on Tuesday afternoon, we have NXPI, which is a semiconductor company. It will be important to see whether they do well or not. On Wednesday afternoon, we have Meta, we have Microsoft, we have ARM, we have Qualcomm, we have Lam Research, all very important, major tech companies slash AI companies in the current scope of the market. So Wednesday will be an extremely important day to pay attention to the earnings in the after hours. Now on Thursday, we have Apple and Amazon. We have some other big names in there as well, but I'm not too concerned about them. It's primarily Apple and Amazon in this situation. Amazon, not so much about the tech portion, but they do, hold a very large weight within our indexes. So it's very important to pay attention to what's going on with them. And they also have a very good outlook of what's going on with the overall consumer. So they're going to be very important regardless. Friday, really nothing. So that's really what I'm looking forward to this week. Again, NXPI on Tuesday, Microsoft, Meta, Qualcomm, ARM, and Lam Research on Wednesday, and Thursday's Apple and Amazon. So we'll see how those do. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Alright, and getting into the technical analysis, we're going to start with the daily time frame, and we're going to start with our Bollinger Bands and moving averages. So one thing I want you to pay attention to here, which it is kind of difficult to see with my different array of colored spaghetti on the screen, is that the price has been trading below all of our recent or nearby supports, meaning it's below the 5-day, the 10-day, the 20-day, and the 50-day support. The only support it's not anywhere near is our 200-day support. That's still far below us. However, with our price being below all these ranges, and with Friday giving us that upward 5 mile rejection, 5 mile meaning the 5-day moving average, um, that kind of really positions the market for this lower Bollinger. Now, the lower Bollinger is currently at the 733.63, and that price point will be very important when I pull up the drawings in just a second here. Now, sticking to the daily time frame still, and looking at all the drawings, before we go into that 733 that I mentioned just a few minutes ago, I do kind of want to point out what has been transpiring over the last few weeks. Okay, and by a few weeks I actually mean a few months, is that back in June we hit the all-time high. Okay, and we created this really nice resistance range. I know in this context I should probably change the color of the resistances and the supports because I do usually have the resistances in red, the supports usually in yellow. So this should be red, but we're not going to focus on that. This is an important range because each time we've gotten close to this range, even towards the bottom, we've had major rejections. And now we're back on that path. Okay, we're back on rejecting downward. Okay, we were very close to hitting all-time highs again, and straight down into the gutter we went. Now, I have a little note here saying selling channel persists, and I want to actually pull this up on the 4-hour time frame so that it's a little more clear. But this support channel, okay, or this selling channel has been trading very, very accurately. And by that, I mean that it's been heading up to the top, pulling down to the bottom, heading up to the top, pulling down to the bottom, and now potentially what we can see here is pulling up to the top. Okay, this would still be bearish price action, but it would look very bullish, and it would look like almost like getting ready to break back out again. Um, we have to be very, very concerned about this selling channel because it has been very persistent over the last couple weeks, and it's been very strong both on the top side and the bottom side. So if we're going to push back up towards that top side, I would be looking around that 745 potentially. That's if we really get that push to the upside. However, the bottom side of this channel is at this 731.95. Now, that is a very important support, as you can see right here. That's a very important support, and that would very, very accurately contain the bottom of this channel. Now, if we get that support, and if we push the bottom of this channel, and I don't want to overwhelm you with all these drawings and everything going on, but going back to the daily time frame here, this would push us into the lower Bollinger. Okay. Now, I don't want to fully discuss Bollinger mechanics right now because that's kind of over the scope of what this video is. But usually if we get a push into the lower Bollinger, we're going to secure that level by pushing underneath it, and then the next day having a lower low. Okay, and from that lower low, usually we'd see some upside. So we do have the potential of that occurring here, especially with this channel still being persistent the way it is. Okay, now very likely that'd probably be on Wednesday, just based off of where the channel's at, because that would push us down, push us to that lower low, and then push us back upward. That's kind of the price action that I would expect. However, there's a very, very crucial range we need to pay attention to as well. It's at this 726.65. Okay, so there is a potential here that we form this inverse cup right here, form a handle, and then start pushing down really, really deeply into breaking, both that 731.95 support and heading down to that 726.63 support. Okay, these two supports are going to hold a considerable amount of weight right now, so those are the downside targets we need to really be focused on. Now for the upside, I don't have it marked here, but we do have two very, very crucial resistance ranges that we need to be aware of. And one of these resistance ranges are actually going to coincide very well with the top of this channel. Okay, so we have the 743.72 and the 748.70. Okay, as the two next resistances we need to really focus on. Now, if we break this channel and start really heading upward, we will talk about that in the stream / the daily recaps. We'll be able to identify some form of buying channel and then be able to determine exactly where the market's going from there. But with everything said and done, currently we're stuck very strongly in this selling channel. Now, one thing that I do want to discuss is that the conflict in Iran is kind of at I don't want to say a ceasefire because we're not at a ceasefire, but there's a temporary pause in basically both sides attacking each other. Is that going to be seen as very, very bullish for the market? Potentially. Potentially that could pull oil prices down quite heavily. That'll very likely pull the yields down, and very likely that would create some upside pressure into the overall market. But my expectation is that with that selling channel being as persistent as it has been, the market's really in a sell-off right now. Okay, even though we're not really fully there yet, I do want to show the daily time frame one more time to kind of solidify this point. But with the 5 MA, the daily 5 or the 5-day support, the 5 MA is below the 10 MA, the 20 MA, and the 50 MA. And as I talked about last week, that's kind of one of the first signals we needed to really wait for to really start seeing some downside. The next signal here is seeing the 10 MA starting to cross these levels, which as of Monday, I do believe the 10 MA is actually going to be pulled underneath the 20 MA. So that's going to position the 5 MA underneath the 10 MA, 10 MA underneath the 20 MA. Okay, now we still have a little more work to do before we get the 10 MA and 20 MA underneath the 50 MA here in this yellow, but this is all starting to create very, very bearish posture for the moving averages. Um, this is the type of posture where we get a massive, massive sell to the downside. Now, there's this level showing the 716.58. That's not a real candle. It's the 726, 65. So that is misleading, but I do think that that 726.65 is definitely within the scope of what we can expect out this week. So with that said, I don't really have any leanings towards the earnings. I know that overall, many of the earnings have been kind of getting blown out of the water. Um, they'll come in with super, super, super good results, but because they had increased capex spending or something like that, the market is no longer taking that as a positive sentiment. And when investor sentiment starts to change like that, so that starts to tell us that we're entering different market conditions. And with different market conditions, maybe the market's telling us that we should no longer be up in this range. Okay, maybe we need to be pulling down and heading down, um, with the current investor sentiment. So that's the technical analysis for this week. Again, I'll be streaming and posting the daily recaps, so I hope to see you there. And with that said, I hope everyone has a great week. If you like my videos, it'd be great if you can leave a comment or a like or anything else, because anything does help me get a little bit more exposure. But with that said, have a great week, everybody, and I'll talk to you when I talk to you next.